Hey everybody, I'm Norris. It's Wednesday the 23rd. It's our final video for the year. But hey, if a consumer could take out an interest-free, zero-payment loan for 10 years, you think that's a good idea? That and much more as we cover the biggest headlines in real estate. First of all, Merry Christmas, Happy Holidays, and Happy New Year. We will see you on the other side of 2016 after this video. Up on the radio show, it's really important. I wanted to say it up front because it's an important show about the HERO program. If you're not familiar with it, we started talking about it last week on the radio show. Mark Dowling and Paul Herrera with the Inland Valley Association of Realtors takes a little bit of a peek inside the program and what it means. And it really is very interesting because people are able to do sustainability projects on their property and attach it to the tax bill. And the tax bill follows when the sale of the home happens, it actually stays with the house, not the consumer that took out the loan. So don't miss that. It's going to be really important, and we keep on hearing about deals falling apart, and it's going to be really interesting to see if this expands or changes or things happen in 2016, but don't miss it. The National Association of Realtors reported a 10.5% decrease in existing home sales in November, putting them at a 7-month low, and it's blamed largely on the new TRID regulations. First-time home buyers make up 30% of sales, and that's typically around 40%, so some are getting a little bit worried that prices are going up faster than incomes. Home prices, on the other hand, showed a 0.5% increase and are now at levels higher than the peak in 2007. All cash sales continue to decline to normal. They now stand at 32.5% of sales, and that seems pretty healthy to me. And then a poll by Colliers International shows global investors are still feeling great about the U.S. real estate market, and more than 50% of them expect to increase their holdings in 2016, including offices, industrial, and shopping centers, and those are in order of importance and likelihood they will invest. Wrapped up in the controversial $1.1 trillion budget bill was a clause treating foreign pension funds the same as their U.S. counterparts. The measure waives the tax imposed under the 1980 Foreign Investments in Real Property Tax Act, known as FIRFTA. I hope I'm saying that right. The rule could mean lots of liquidity from foreign buyers in 2016. The law allows foreign pensions to buy as much as 10% of U.S. publicly traded investment trusts without causing FIRFTA liability, and that's up from 5%. So right now they make up a very small portion of actual buys, but foreign buyers have been really strong, so it will be interesting to see how a change like this could affect our 2016. Included in the spending bill is also the extension of the Mortgage Relief Assistance Act that allows homeowners to exclude forgiven mortgage debt relief from their gross income. So if they did a short sale once upon a time, that forgiveness actually showed up as income on their tax return. That's no fun. It's expected that that change saves homeowners in 2015 around $3 billion. Startups are targeting previously untapped markets, including Point Digital or Point.com. Point Digital's target market are consumers in areas with likely home appreciation, that they have home equity, but maybe they have so-so credit to where they wouldn't be able to get a HELOC with a regular bank. Unlike a HELOC that must be paid monthly, Point is making an investment in equity, so there's no payment, so $0 per month, and you have up to 10 years to pay it back. And if you sell a property, they take part in the sale, and so you both win if there's equity. As their website says, sell a fraction of your home's future appreciation today, buy back or sell when you want, $0 monthly payment. You can have less than a 620 credit score, but must have 25 to 30% equity in the home, and the cost of the investment adjusts according to that risk factor. No surprise, they started in California, but is it a good idea? Some of the examples that were given in this news story, and I think it was on Bloomberg, talked about the San Francisco market, about people working at Apple, these tech companies that are paying off credit cards, but how does that show up, and do other credit cards know that that's been done? Just really interesting, and especially in markets that are really overheated and maybe we might see some price softening. That could be really scary if that all unwinds. But what do you think? If you're on YouTube, please like and subscribe to the channel and leave your comments below. Is it a good idea? And if you're on Facebook, like the video, share it, and leave your comment below. That's it for the news this week, but if you want more, you can always check out the blog, thenorrisgroup.com/blog. Again, on the radio show, Mark Dowling and Paul Herrera with Ivar. Really important session. Don't miss that. January 5th, stay put, cash out, or change seats. January is a huge month for speaking. We're going to be in almost every Southern California. So LA on the 5th. The 12th, we're going to be at the Coachella Valley RIA. The 14th, the Los Angeles Real Estate Summit. We're going to be out in Pasadena. On the 19th, out in Orange County. And then the 21st, back in Los Angeles. So it's a really great talk. We get calls every day talking about how people are stressed out and not sure what to do. And there's reasons to do all three of those things, so you won't want to miss that. If you want more information on hard money loans, including our fix and flip, buy and hold, and new construction with rates starting at just 6.9%, check out thenorrisgroup.com. Or if you'd like more information about passive investing with us here at the Norris Group, check out tngtrustdeeds.com. With that, Merry Christmas, Happy Holidays, Happy New Year, and we'll see you in 2016.